Another thing that I kind of point out is that even though Bitcoin has had multiple cycles of highs, like higher highs and higher lows along the way, most people didn't see the early ones. And most people don't look at the logarithmic Bitcoin price chart. And so for a lot of people, Bitcoin always looks like it's in a bubble or it's a broken bubble. They kind of look at the linear price chart. They only see the last cycle or two. I think when they personally see 3 higher highs, they start to realize that this isn't going away. So the 2017 cycle was kind of the first like big public awareness cycle. Then the 2020 2021 was a second cycle that was pretty mass known, and this is the third one. This is the a higher high since those kind of is the third kind of public cycle of getting higher highs, and I think that's relevant. I think when people see it firsthand that this is they keep ignoring it and it keeps going higher. I think people start to take it more seriously.
Lyn Alden has once again captivated the spotlight with her profound insights. As the market pulses with a mix of optimism and caution, Alden has analyzed the relationship between changes in the money supply, fiscal policy, and the story of Bitcoin. She emphasizes that the recent bottoming of the money supply marks a turning point, igniting a shift toward defensive assets, while Bitcoin stands at the crossroads of transformation. In addition to generating interest, spot ETFs and regulatory changes are indicating a fundamental shift in the way digital assets are incorporated into the international financial system. Bitcoin is evolving from a speculative asset to a store of value and a force for structural change. Alden's study breaks down this profound change and presents it as a challenge to conventional financial paradigms and a model for economic resiliency. Before we continue, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more expert crypto content. Now, let's dive back into the interview and explore more insights from Lyn Alden.
As far as Bitcoin's concerned, I've been in the camp writing that I think it's more likely to break up out of this consolidation that it's been in rather than break down. And, there's a number of reasons why. I think what happened was that the launch of the spot ETFs in the US earlier this year kind of pulled forward some demand. There was that period in the springtime where the price just went vertical and people got very euphoric. And I think it took time for the market to kind of digest that. Some of the initial euphoria wore off. We kind of went sideways. If you look at things like on-chain cost basis, like realized price, that was inching up the whole time during the entire consolidation, which is healthy. It basically means that more Bitcoin was trading hands at these higher price points and kind of setting a higher foundation. So I think that the breakout is healthy. I think I think it happened at the right time. I think this kind of resumes the bull market that we were in maybe before, that we pulled forward some of that bull market. I don't like anyone else. I don't know if we're going to retest the breakout area or not. I don't really follow too much the day-to-day price action. But I think it's a healthy bull market to kind of enter. And I'm generally bullish for the rest of this year and then kind of next year. If the United States just came out and said, hey, we're going to do a strategic reserve, then that's going to affect the price compared to that not happening, or any other sizable country for that matter. Right now, we have rather small countries that use it in their sovereign reserve. So El Salvador, the Kingdom of Bhutan, any number of dozens of fairly large countries, if they were to come out and do this, they're less likely to do it. But if they were, that can kind of change price forecasts. I generally view more structure that Bitcoin is kind of working its way up the monetization route. So it goes from collectible to kind of niche medium of exchange. Like, for example, when WikiLeaks lost all their payment rails back in 2011, that was one of the first kind of tangible use cases of Bitcoin. I think it was 2010 actually, but basically it was like let's send Bitcoin if you want to donate rather than these other methods, because they were shut down, and it became this backup option. Then of course as it's limited by its supply cap, so it became more interesting to long-term holders and investors. And there's kind of a liquidity limit. So when Bitcoin was fairly small, where a handful of people, a handful of wealthy people, if they want to buy it, they end up moving the price, that there was liquidity limitations for what institutions could do with the asset. And so it kind of had to reach certain levels of adoption before it even gets on their radar in any serious way. And I think now we're entering that it's a large and liquid enough market that major institutions, and then to some extent sovereigns, can potentially view it as an asset that they could hold, or that is of relevance to them, good or bad. There are some institutions that are kind of worried about it, and there are others that are like, hey, maybe this is something we can invest in now. It can be useful for us. So I do think that it's reaching that level where it's more in the conversation now. Another thing that I kind of point out is that even though Bitcoin has had multiple cycles of highs, like higher highs and higher lows along the way, most people didn't see the early ones. And most people don't look at the logarithmic Bitcoin price chart. And so for a lot of people, Bitcoin always looks like it's in a bubble or it's a broken bubble. They kind of look at the linear price chart. They only see the last cycle or two. I think when they personally see 3 higher highs, they start to realize that this isn't going away. So the 2017 cycle was kind of the first like big public awareness cycle. Then the 2020 2021 was a second cycle that was pretty mass known, and this is the third one. This is the a higher high since those is the third kind of public cycle of getting higher highs, and I think that's relevant. I think when people see it firsthand that this is they keep ignoring it and it keeps going higher, I think people start to take it more seriously.
Lyn Alden thinks that strong events like the launch of U.S. spot ETFs, which sparked demand earlier this year, are poised to force Bitcoin out of its recent consolidation phase. Following a period of consolidation and a significant price spike, important indicators such as the realized price indicate that Bitcoin is now more firmly positioned. According to Alden, this is a positive development that suggests the market will continue to rise. She draws attention to how Bitcoin has changed from a collectible to a specialized form of payment, helped along by its limited supply and growing institutional and even sovereign interest. Bitcoin's potential for widespread acceptance has been solidified by its increasing liquidity. Despite ongoing skepticism, Bitcoin's repeated cycles of higher highs and higher lows demonstrate its resilience and long-term significance. According to Alden, Bitcoin is a technological innovation since it has a decentralized ledger that allows for safe, quick transactions without the need for a central authority. By providing trust and cooperation across various institutions, this innovation closes significant gaps in the financial system. Let's dive into more of Lyn Alden's fascinating insights. Don't forget to like, subscribe, and hit the notification bell for more daily updates.
And so the way that I kind of describe Bitcoin is that technology's finally progressed enough where we now have very fast settlement in addition to transactions. So we've enjoyed fast transactions for a long time, but no way to finally settle value, other than very slowly. And now we finally have the ability to do that within minutes or in some cases seconds, depending on a higher layer of the technology. And so Bitcoin represents a way to run a ledger that has trust in it, that there's reasons to expect that its attributes to remain fairly consistent over time, despite the fact that there's no single entity running it. It's a way to coordinate multiple entities to settle value, to recognize a shared ledger. And I view it as kind of like we've kind of progressed past the point where centrally controlled ledgers are kind of the best way to solve something, and that now we have Bitcoin. Governments and central banks are not a monolith. They consist of multiple people. And so I think that while there will be individuals in governments and central banks that are interested in the technology, that most will not be, because few people ever want to give up their own power. Right? I mean, for a long time, the central bank's position is basically trust us. Like, we're the ones running the ledger. You can trust us. The trust is often broken, and now there's technology and other ways of that people can choose to trust instead, and they have more self-verification over and more self-autonomy over. And government right now around the world is kind of based on the idea that if they run deficits or their bond market has a problem, well, they have a central bank. They can just kind of print more units and fix the problem, and kind of spread that debasement out more invisibly among people that hold their money. And that's not something that I think entities are quick to let loose, that they're more likely to fight to retain it. Even though there are individuals, usually minority voices within governments that come out and say, I think this is good. I think we should, so there are people in government that are saying, let's go back on a gold standard, or let's embrace Bitcoin. But those tend to be the non-majority view in a lot of cases. And I think that's probably going to continue for a while. And I also think that even as countries embrace Bitcoin in some ways, like, for example, a sovereign reserve or something, I've generally been of the view that governments are going to be anti-privacy for quite a while, because ever since the modern era, they shifted a lot toward income taxes. That kind of requires surveillance to make sense. So back in the older days before income taxes, there were different types of taxes, because even if you were a king and you had all sorts of grandiose views of what you should control, you wouldn't even think that you could monitor everyone's income and take a certain percentage. Like, it's just too many transactions were inherently private for that to be a workable thing. And so taxes were done in other ways. But in the modern era, where everybody has a bank account, and it's all kind of centralized and surveilled. We shifted more toward income taxes, and private transactions kind of bring us back to like a faster version of an earlier age. And I think that's where they're going to keep pushing back on, because I think they're going to say, well, okay, you can hold Bitcoin, but we prefer to be in these walled gardens that we can see. And I think that they're going to probably be enemies of financial privacy for quite a while.
Finally, Lyn Alden describes a significant technological advancement that Bitcoin represents. She describes how Bitcoin fills the gap left by existing banking institutions' decades-long struggles with quick transactions and quick settlement. In the past, we could complete transactions fast, but settling value and closing deals took a long time. This changes by Bitcoin's shared ledger technology, which permits decentralized, trustless cooperation. According to Alden, Bitcoin is an unusual method of managing a ledger that is independent of any one governing authority and has built-in trust. It represents a significant departure from centrally managed systems by enabling numerous entities to collaborate, settle values, and keep a shared ledger without the need for a single point of control. She draws attention to governments and central banks' innate reluctance to fully accept Bitcoin. The idea that trust us will handle money and economic issues has long been the foundation of centralized institutions, which frequently use tactics like currency devaluation to control deficits. Because Bitcoin uses technology to provide autonomy, self-verification, and trust. Instead of centralized control, it disturbs the lack of transparency that favors this system. Alden also talks about the historical inclination of governments to monitor financial activity, especially in relation to income tax systems that depend on centralized banking infrastructure. She expects authorities to continue to oppose this kind of privacy. To receive daily updates on additional ideas from Lyn Alden and other prominent figures in finance and crypto world, remember to hit the notification bell, like, and subscribe.